Michael there for more now on Eastern Europe's investing success stories with Capital Economics senior emerging market economist Neil Shearing joins me now in the studio. Neil, just looking at what happened in Eastern Europe, they really did have a particularly hard time at the worst of the recession. It's not a success story across the board, but we do have some very positive stories out of Eastern Europe now, don't we?
That's right, yes. I mean, what we're facing now is, like you say, very much a twin-speed recovery, I think. Some economies will continue to struggle, the likes of Romania, some economies in the Balkans, Bulgaria and so on and so forth, the Baltics too. But at the same time, there are some economies in the region that will do very well, I think, over the next 12 months or so.
And if we look at Turkey right now, it's actually been quite a success story, hasn't it?
It has, yeah. I mean, the issue with Turkey is that it had its crisis at the start of the last decade. It had a banking blowout, and it sorted out the banks thereafter, and it avoided the worst of the credit excesses that swept across most of Eastern Europe at the latter half of last decade.
So what's driving Turkey's success at the moment?
It's all domestic demand. Very, very supportive fiscal policy, supportive monetary policy, banks in good shape and willing to lend, the labour market starting to recover, consumers starting to spend.
Now, there is slightly worryingly, though, a current account deficit there that's widening. That's not a good sign, is it, after everything that happened to Turkey before?
That's correct. And this is Turkey's traditional historic weak spot, is that it doesn't save enough domestically. It has to borrow from abroad to finance its consumption and investment. And that's really a structural problem that the government must start to now turn to. Now that the cyclical problem of recession is over, it now needs to start to turn its attention to these structural issues, how to boost domestic savings, how to move to a more sustainable course of development, narrow that current account deficit.
And if we look at Poland and the Czech Republic, again, both strong manufacturing, they're being helped by Germany, aren't they?
That's correct, yeah. That's particularly true of the Czech Republic, also Slovakia, but also Poland, like you suggest. The question there is, how sustainable is that? In a world in where demand is constrained and where German manufacturing may start to suffer if global demand weakens next year, as I think is possible, then presumably that prop to Central and Eastern European growth that's come from German manufacturing will start to wane. And therefore, I would still think that growth in Turkey is going to outperform growth in Poland and the Czech Republic.
And in those countries, is there much opportunity for foreign investment?
There is, yeah. There's an enormous opportunity for foreign investment still. Still, fundamentally, the region is very poor compared with Western Europe. Per capita incomes are something like a third of the Eurozone average across the region. There is still plenty of scope for catch-up growth and foreign direct investments.
OK, Neil Shearing, thank you very much indeed for that.